Hello everyone, welcome to the Ichimoku.co chart of the day. Moving next over to the Aussie dollar, US dollar, and here we see the market just trending to the downside. For today, there was potential for support, and the candle that has finalised trading is that second last candle on the chart. Just see if we can magnify it a bit more. It was a doji type candle where the market is opened and closed around the same level and very close to the midpoint level. So neither party took control. Both sides lost commitment through the trading day. But already in the news session, we have seen the sellers coming back into this market and trading down through that low. So some news out here has the sellers very strong in this market, where there was potential for a change of trend off the back of indecision at the end of this downtrend. The trend to the downside here has been fairly moderate. We don't see any significant black body candles and a series of fairly small bodied candles. Today, however, we are seeing stronger selling, but whether the market maintains the close down at this level is debatable. Could see the buyers return back into the market and close up here, so this candle can't take too much from it at the moment because it is unfinished. Having said that, however, we have extended well down through that previous low and through some significant support around these previous lows here, 78.75. There is an opportunity here for the sellers to retrace back towards the Kijun-sen indicator at 78.18. Now, we are seeing the market test down through this area here, as I mentioned, some bearish activity down through there, and if we do see the market test down through that level 78.31, previous level back past here, and on the way up some minor resistance, could act as support before we get down to that Kijun-sen. That's at 78.31. Now, just looking at the trend here, and here we've seen a confirmed change of trend over the last week or so, where the market was previously in an uptrend in the second term time frame, forming a series of higher peaks and higher troughs. Here we formed a lower peak and a lower trough, with a peak, a trough, lower peak, lower trough about 4 trading days ago as we took that area out. The market has extended down through that previous trough, so fairly strong trend in this shorter term time frame. And just looking to our pitchfork technique, and we're examining the relationship of this second time frame downtrend to the immediate previous second time frame downtrend. Here we saw today the market testing around that internal line, the lower internal line. We were previously trading above that median line. We traded down through there, so showing weakness. We are seeing today now in this current candle the market finding support at the lower median line, so that's a crucial area, and we are seeing some rejection from there. Now, if we do close down below there, we could see a test down through to the first warning line, which is a fair way away from where the market's trading at the moment. I doubt we will get there in one move, because the Kijun-sen could come into play on any breakout down through that lower median line. So that is an area where we are likely to see the market hold up. And just looking at the minor pitchfork technique on the current first time frame downtrend, and here over the previous 4 days we saw the lower median line holding as strong support. For the past 4 days we are testing down through there now in a fairly strong bearish manner. Any move to the downside gives us a target very close to the Kijun-sen indicator over the next couple of days, around this 78.20 level roughly. So that's a potential target for any significant downside move over the next couple of days. If it really does depend on how this current candle finishes, we are seeing very strong significant breakout down through there. I suggest we could see the market test down to this level. At the moment for today, we are just slightly above that Kijun-sen, 78.27. For the next day, we will be around the Kijun-sen, around roughly 78.20. And just looking at the bands here, and if you recall, as we were watching the market trade up to this 80-cent level and through about a week and a half ago, I suggested that we were looking very, very overextended, and that was based on the depth of activity away from the edge of the Ichimoku indicators. It was just looking so overdone. The market extending up through that 80-cent level with these shadows here suggested the buyers losing commitment up around this level, and the width of the bands here suggested that the market was overdone, and we were looking for a mean reversion. We have seen that. Now, importantly, however, the market has tested down through that middle band here where we found support over the last few days. We are testing through there down to the lower band. That lower band is crucial for this market. I suggest that it probably will hold. It trades at 78.53, but a bearish close down through there could see more significant trading to the downside. We do have the band squeezing at the moment. We will be looking for a trending move in either direction. And at the moment it does look as though we may be setting up for a move to the downside, although don't preempt the market, we'll react. Look at how the market reacts to these areas, and at the moment support coming in here. That's our benchmark for the next day's trading based on the bands. Basically around the 78.50 region roughly.